Okay, so in today's video we are going to do Crocket company question, and the question first requirement is for the investment decision 1 calculate the NPV of project B, and second part, given the capital constant means capital rationing, calculate the optimum investment combination and the resulting NPV. Okay, so first we will do the part A and part A1. Okay, so now let's read the question. Crocket Company is a manufacturing company that has a 3 investment decision for the coming year. Investment decision 1, 6 investment projects are being considered with the following details. Project B is expected to generate the following cash flow. As we have given the 6 investment project, but we don't know the NPV of the project B, so we have given information below here, and using that we need to calculate NPV of the project B, and which is the first requirement of part A. So I will let's take for 30 common year 0 1 2 3 4 sales is 725 for the first year, second year, third, and for the fourth. Okay, project B cash flow are before allowing for inflation of 4% per year for sales income and 5% per year for the cost, means these all sales are in the real term. Now we have to inflate. Okay, inflate. One thing remember, if the question don't tell which method we should use, just assume कि nominal करना है. Okay, so inflation percentages for the sales income, inflation percentage is 4%, and it will be inflate for the from the year 1, because question didn't tell कि first year का value इतना होगा, after that the inflation will occur. Anything like this has not been mentioned in the question, so we assume कि हमारा inflation will start from the year 1. So for the year 2, okay, so I had calculated the inflation amount for the year 2 as well, year 3, year 4. Okay, so now inflated sales income or sales income in nominal term, sales income in nominal terms. Okay. Okay, so multiply this to 74 for the year 1, and okay, so now we will convert it in the absolute term. Okay, so this is our sales income in the nominal terms. Now it's term for the cost. Cost is also given in the real term, as question has told, 145 for the year 1, after that 168, 202, and 94. Now again we will inflate this as well as we did for the sales income, and inflation rate for the cost, means it is a specific inflation. Sales has been inflated by the 1 rate and the cost has been inflated by the 1 rate. Okay, so 5%. Okay, so power 1, copy, save, paste. So we got it. Okay, now cost in the nominal terms, cost cost in nominal terms. Okay, so now after that we will get net cash flow. Okay, let me do this bold. Okay, you can do this in the separate working. or you can show in the front, no issue at all, it's your choice. Okay, so this minus this, we will get the net cash flow. Copy, shift. Okay, we got it. Now here you can use direct NPV function of the Excel, or you can calculate by discounting this all net cash flow and to get the present value. After that summing all those present value, we will get the NPV. Or you can use the NPV function. It is quite easy for me. Initial investment amount, initial investment okay, so it's given how much it is here, 1500. Okay, so first select an initial amount, but it should be in negative, then NPV, and then 10% discounted, and discount rate also should be in nominal term, and it has already been given in the question. Otherwise we need to calculate using the Fisher formula and select all undiscounted cash flow. Okay, so it's 561.01. Okay, so this one I feel quite easy rather than just discounting all the individual undiscounted cash flow. So but be sure that this cash flow should be undiscounted, not discounted. There is a mistake point while using the function of Excel कि आप लोग गलती कर सकते हो एनपीवी का फंक्शन यूज कर रहे हो बट यू माइट सिलेक्ट द डिस्काउंटेड कैश फ्लो. नो, वी हैव टू सिलेक्ट अनडिस्काउंटेड कैश फ्लो. Okay, so this is the NPV of the project B. We got it, and we did our part A first requirement. Now given the capital constant, calculate the optimum investment combination and the resulting the NPV. Okay, so we for this is for the investment one, and in order to get the optimum investment combination, first we have to check whether the project is divisible or not. Okay, due to the management reluctance to raise the new finance capital for the investment in the above project is currently restricted to 5 million. So our capital constant is 5 million, and project A, B, D, F are all independent. मतलब A, B, D and F are all independent, but the project C and E are mutually exclusive. Here C and E mutually exclusive means you have to choose either C or E. Okay, and all of the but you can't choose the both at once. Okay, all of the above projects are divisible. Yeah, question has told that project is divisible, so it means we have to calculate profitability index. Otherwise we if the project is not divisible, in that case we have to use the trial and error to find out the optimum investment. None can be delayed or repeated. Okay, so let's calculate, and this is for the part A 2 requirement. So project, we have a project A, B, C, D, E and F. Okay, after that initial investment is 1000, 1500, 750, 1125, 1850 and 1300. Again its respective NPV is 390. Then we have calculated for the B here 561, 325, 590, 840, 635. Okay, so now we will calculate profitability index. I will write in the shortcut PI, and how do we get that? By dividing the NPV with initial investment, and NPV divide initial investment, so 0.39. and similarly we will calculate for the rest of the project. We got it. Okay, so now we will rank this project according to the PI. Highest PI will be ranked as first, and which is 0.52 is the highest, so 1. Okay, after that next highest is after 52, it's F. ठीक, then Next highest is 0.45, which is E, but C and E are mutually exclusive project. Okay, so I will now you have to write this कि project C and E are mutually exclusive, so can't be done together. So we will choose the between these two projects we will choose according to the having a highest PI. ठीक है, जिसका हाईएस्ट पी आई होगा उसको चूज करते हैं, बाकी को रिजेक्ट करते हैं. यू हैव टू राइट डाउन इन द नोट. ठीक है, उसके बाद ये हमारा हो जाएगा 3. देन नेक्स्ट हाईएस्ट विल बी 0.45. This is excluded based on the PI. जिसका हाईएस्ट PI we have chosen that. Then तो गया 5 and 6, या फिर इसको 4 कर दो, इसको 5. ठीक है, दिस इज आवर रैंक अकॉर्डिंग टू द PI. नाउ we will do optimum combination. Optimum combination. So rank 1 2 3 4 5. Okay, and according to we write project is 1 is D, 2 is F, 3 is E, then 4 is A and B. Now NPV of the D is 590, F is 635, E is okay, just wait. First, initial investment. Okay, and we do have total amount. We have, what is the capital constant amount? It's 5 million, so we have taken 30 common, means 5,000. So initial investment is, here we will write percentage we have invested. So we will do 100% investment here, and amount of initial investment for the project D is 125. Okay, after that for the F is 1300, and it is also a 100% investment. So what is the total amount of this two? 245. Still we can invest. Okay, so project E initial investment is 850. Okay, so we did 100% investment in E as well. So what is the total amount? Okay, so 4275 we had already invested in the D, F, E. Now what is the remaining amount? Remaining amount is, oh, just wait. Okay, so means 725 is only remaining, right? So 725. Okay, so 5,000 done. And what is the percentage? Initial investment was initial investment of amount of A was 1,000, but we have only 725 amount left, so we had invested 0.725. We will convert this into percentage. So we have invested 72.5% in the project E. So NPV will be also calculated accordingly. So select this percentage and NPV of A. Okay, so we got it. Yes. So now total, okay, so total is 2. We will round off. Okay, so this is our optimum combination, and you have to write in the word that the after investment in the project D, F, E, we have only left 725 amount, and which is invested accordingly in the A. It means 72.5% in the A, and NPV is calculated accordingly. So our optimum combination is project D, F, E and 72.5% of A, which is giving the NPV of 2348. Okay. So what is the next requirement? Okay, so for the investment decision 2, explain the approach Crocket companies should use to determine the optimum replacement cycle for the company car fleet. What is the investment decision 2? A number of corporate company employees have company car. The entire company car fleet is now due for renewal, and in the past it has been replaced every 4 years. So management are not sure this is the optimum length of the time and feel that the company fleet replacement cycle such as every 3 or 5 years should also be considered. So basically this part belongs to our replacement decision, and which we gonna be take according to the EAC calculation. And we have to explain the what approach, I mean how do we get to the final conclusion regarding whether the replacement should be made in the 3 years, or like in our case in investment decision 2, whether replacement should be made in the 3 years or 5 years. We have to explain the approach. Okay, so we don't have to do calculation, we have to explain. This is theoretical part, and first look at the mark, it's for the 4 marks. So what we have to do is, first of all, we have to determine the cash flow in our each cycle. Like in our case is 3 and 5 years, we have to determine the whatever the cash flow occurring in the year 3 as well as in the 5. Okay, after that, and the cash flow would be like modifications in its initial cost, I mean modification I'm telling, I mean repair and maintenance is initial cost. This will be the cost will be occurring during the year. And we, after identifying the relevant cash flow for the each cycle, we have to calculate the NPV or PV of the each cycle. Okay, and on the basis of NPV we cannot take the decision, because NPV ignore the different time scales, like in our case 3 and 5 years. Okay, basically if we are going to take a decision on the basis of NPV, asset having a higher life will have a lower cost obviously. So yeah, basically minus में आएगा, because all are the cost, no any there is no any income. So basically we, and after that calculation of the NPV of NPV to, we can't consider NPV to take our final decision, because it ignores the different time length of the project, I mean assets. So we have to calculate EAC. So means NPV of each option should be converted into the EAC by dividing with their respective annuity factor. अब जैसे कि यहाँ पे 3 years का है, तो 3 years का annuity factor से divide करके and 5 years का annuity factor से divide करके जो भी lowest होगा हम लोग का डिसीजन उसी अकॉर्डिंग बेस्ड होगा कि लाइक इतने years में we have to replace the assets. Okay, so these things you have to explain for the requirement number B. Okay. Okay, so third is, in relation to the investment decision 3, describe 2 approach for dealing with inflation and provide a reasoned recommendation as to which approach Crocket management should follow. Okay, so one thing it's याद रखना, whenever you are attempting to write a theoretical part, first thing you have to be careful is, यहाँ पे Crocket company को बोल रहा है, यहाँ पे भी Crocket company, so mention their name कि Crocket company का ये वो ऐसे करके, जैसे यहाँ पे 3 and 5 years था ना, so you have to mention these things. Okay. So okay, so for investment decision 3, question has told to explain the method to deal with the inflations. Okay, so let's read out first. Management of the Crocket company are considering the financial viability of another project, but as yet no detailed financial information is available to perform the NPV appraisal. One of the reason for this is that various cash flow will be subject to number of different rate of inflation that are very uncertain at a present. For example, selling price inflation may no more than 2% per year, whereas material cost inflation could be anything from 4% to 6% per year. General rate of inflation is expected to differ from the both of these. Management are not sure whether appraisals could be performed by simply ignoring the inflation altogether. Note the 5 million capital constant outline with investment project 1. Investment decision 1 applied to the investment decision only, not to the investment decision 2 and 3. Okay, so basically The first there are two methods to deal with the inflation. One is the real and other is nominal, and you have to explain both this method. Like for example, in the real method, each and every cash flow are kept in the real terms. Real term means in their without inflation, we used to keep those cash flow, and the discount rate which we use to calculate NPV or discount the cash flow, that should also be in the real term, means without inflation. Okay. And similarly, in the nominal case, what we used to do, we used to keep our cash flow in the nominal term, means after inflations, and even the discount rate which we use to calculate the NPV, that should also be after the inflation. We can see in the example as we did the first calculation. Here we have inflated the sales with we have inflated sales as well as cost, and the discount rate, this is the 10% which we have taken here, is also in the nominal term. We you can see in the question it's given already, nominal cost of capital 10%. Okay. So this thing, after that you have to mention, like if the there is inflation taxation case in the question, in that case it is better to use the nominal approach. And other thing, in case of specific inflation, like in the investment decision 3, you have to mention this point, mentioning the Crocket company as well. So like in the investment decision 3, there is specific inflation, means selling price is being inflated by one rate and material cost is being inflated by the one rate. It means this is a case of the specific inflation. So here, in case of specific inflation, nominal approach should be used, not the real one. Okay. And other thing, even though nominal cash flow has been given, means after the inflation cash flow has given, if the question has told to use the real term, in that case you have to deflate those cash flow to get in the real terms. So these all things you have to mention while writing the answer of the part C. Okay. And a question has also told to recommend, so here you have to recommend that the Crocket company uh, selling price has been inflated by one rate and the cost has been inflated by one rate, means this is the case of a specific inflation. And in case of a specific inflation, it is better to use a nominal approach, a nominal method. Okay. So this is all about this question. In next video we will do Kaplan company question, and this is I think last question of the NPV section C. Okay. So have a good day.